Mic check. Can you guys hear me? Hello, hello. Okay, one person can hear me. It's just me and you today. It is Monday, new week. Spend some time doing a little bit of due diligence before we jump into the charts. Today is the 18th, which means quiet Monday, Tuesday, and shouldn't be that much of a big deal because the meeting has already passed and everybody knows what happened. PMI should get some volatility around PMI. So Thursday, 8:45 a.m. should be wild. 7:30, not so much. 8:45, definitely. Hourly speaking, I mean, as a given. So looking like the volatility is coming from Thursday here. So if we get one-sided price action, it's setting up Thursday higher low of the week type of vibes, or Thursday's close doing something significant, either a big range day or leaving an established range. So before we look at any charts or anything and try to deduce any bias or anything, this is already setting up a couple of things in the back of my mind to be aware of. If there's a range created between Monday and Wednesday, and then Thursday is starting to break out, or Wednesday broke out and retraced, I'm looking for Thursday to kind of not set the stage, but show willingness. Automatically, I had a sell limit left from Friday, if you remember. I didn't get the retracement I wanted, so I have a sell limit still set in the market with a 20-point stop. I think it's 20 points. If it's not exactly 20 points, it's very close to it. I received no alert that says it was triggered, so I'm assuming it hasn't. But as far as the calendar goes, pretty basic, pretty basic. If you have looked at Orange Folder News, then you could contribute to this part of the call by either posting and sharing those or posting them in the chat. So ABC analysis. What is this? 7-4? 720. Previous days, 2 p.m. Sitting inside here. So we can see that since the start of the day, market has traded down, broke with displacement, FEG sitting there. It's just out of curiosity. Since we traded down into the level, we're still below the level. I'm gonna keep this FEG on as a breakaway gap narrative. High and low since 720, pretty easy. Not since 720, before 720. My bad. So as far as analysis goes, this should be something that you may or may not have done already. At least the two black lines. Well, the three lines. There we go. Now let's take a look at what's going on, and then if we have time, we'll kind of zoom out a little bit. Since we broke below here, and at the moment it's acting as resistance, it goes to show, or it makes sense to look at this as our current range. Which would mean we are currently in the discount portion of this range. So if you look at open, break lower, breakaway gap, and a new range, if we are bearish, while I wouldn't want to see the breakaway gap get traded to, again, as usual, it makes sense to see them trade back into premium and then go lower. That, or on that note, I'd be interested in two things. These two relatively equal highs and this up candle here. I don't want a whole lot of stuff on my chart. So let me see what should be ideal here, Shane. So there's an expansion lower that broke and we retraced, swept internal liquidity. Up candle, broke lower. This high is still higher than this. So let us keep this order block on the menu for directional premise. So as far as the lower time frame goes, nice little range. This is 650 and this is 727. So roughly about a 70-point range. For directional premise, it goes without saying that I would want to see them continue lower for many, many reasons. For this, using this information here, broke below key level, deliver at the key level, showed resistance symptoms, then we broke lower again hard. That retracement creates a new range. We're still inside this range, so we're not seeing clear run to this direction type of market, but it is favoring breaking lower. So for that purpose, we're looking at internal to external. At the very least, you want to see them back above 50% of this range. Still early, as you can see. So not going to be too dialed into this yet. I'm going to take a look at what's been happening on those the money flow. So it should be this one. What do we have here? We have Nasdaq yet to close below the level that we are looking at for sustained movement lower back into this old low. 22.7. 22.727 looks awfully close to the 23.727 we're looking at before. But anyway, this is what we're looking for Nasdaq to reach for in the next 3 weeks, maybe less. I think this is going to be confirmed once we close below here. Down candle, big move at a high, order block potential, closing below the open price. Mitigation. I'm leaning on mitigation because correlation says these two guys move together. And this one moves first.
Good morning, Kish.
Morning.
Just wondering on the mitigation point, whether shouldn't it be like liquidity taken twice before you consider mitigation, or even a single sweep
Yep.
of liquidity you can use the last down candle as mitigation as well?
Correct.
Okay.
This no. What I say by I mean by correct, but this is where we gapped up and printed a high.
Mm-hmm.
Then it was run. Then we broke lower. That's why I remember when this was happening, I had no commentary about market going above here. Because you don't
Yeah.
plan for a double purge. You don't, it's something that happens, and if it happens, you read it, but you don't plan for it in advance. It's like it's summer and you walk with an umbrella. Nobody's going to walk with an umbrella in summer for no good reason. But
Yes, they
if
do in China.
really
Yeah.
it rains in China, and oh, it happens. So again, and then that justifies why these things happen in a weird sense. It's not something, a double purge is not something that you can plan for unless you're just naturally pessimistic and you want to see it get run twice. It's something you look at and you read. Since it happens, if this, then that. So that's why when we're here, I'm looking at retracement and then lower prices. That retracement got much higher than I'd liked. Down candle, hold high, mitigation. This is mitigation. If it's not mitigated, then trend line liquidity, for lack of a better word. But I want you to take a look at the order the same day, August 11th, August 11th, same day. So I want you to look at this. This is what I'd love for NASDAQ to do, this type of conviction, but it's not. So because I'm using the correlation between these two, I want to see, as a matter of fact, I'd have preferred if NASDAQ gapped, well, no, it wouldn't have gapped down because the open would have been the same open. But because this went higher, potentially a gap up. But besides the point, we're not talking about that now. Since this is already breaking down fast, I want to see this follow suit. So the confirmation is going to come from NASDAQ doing what this did, which is close below that daily candle open price. So, devil's advocate for a moment. Devil's advocate for a moment. This is the worst delivery. Like, before you don't attack me yet, the worst delivery that we can see that I'd still like is if Monday is just down day with very little retracements. Tuesday sets up around on Monday's high, and then from there on out, that range on Monday and Tuesday gets used for support or resistance. And in this case, I'd be looking at Monday's low, getting another daily close, and then whoosh. Why I'm saying like that? Because there's no volatility here. The volatility that's going to come in the market today and tomorrow should quite likely come from the fact that it's the end of the month and expiration participation should be kicking in. A whole lot of sellers should be coming in the market because options expire worthless if they're not used. And the expiration was Friday. So since a whole lot of sellers are coming in the market, a daily high must be run. In my humble opinion, if there's a whole lot of sellers coming in the market, a daily high must be run. The most cruel way to print that is to have some pump that sweeps all of these. Well, not all of these, just both of these, or at least one. This is the most unfriendly delivery for somebody who wants to see the price action print in line with this delivery. The most cruel way that this can print is a spike out of nowhere that just goes, and does not stop until one of these gets taken. Then it dies. That's the cruelest way. Easiest way for it to print. Lower time frame structure helps to print. This is a big down day. Close below here, confirmation. Then holding liquidity run, daily high, preferably just Monday. How far away is that? Well, within range if we have volatility. Preferably just Monday. And then from there we continue back. So in a perfect world, we have Tuesday being a down day, Monday being a down day, and Tuesday looks like this. but the wick is higher. So a day that goes all the way up, sweep the high, then it crashes. Outside of that, mm, nothing here to take information from. We need to see that. It's either that or Tuesday's volatility. There's nothing else on a daily chart that you can commit to and say this is very, very clear. This is the same. Shouldn't be the same. One of these should be gold. Messy pair. 0 to 10 would not recommend. One of these should be oil. Where's oil? Yep. So I talked about the CSD that I would have wanted to see here. Didn't happen. So the curious question is, if the money is being pulled out of everything, gold is stagnating. There's no rally that shows oil is pumping. Bitcoin is clearly not pumping. Money is moving into currencies, which would mean when money moves out of the dollar, well, wait, I don't know if it's going out of the dollar yet. If money is moving out of stocks and crypto and gold, that should mean an underlyingly weaker dollar. If dollar is weak, currencies rally. So the good book says. So that should mean, okay, EU, this doesn't look or feel underlyingly weak. Looks stagnating too. Likewise. So if I was to be bold, I'd say currencies look prime for a breakout. Not a currency trader, so should be interesting to see how that develops. Outside of that, everything is on the side and dry powder. Everybody's holding, but it's summer, so that makes sense. But money being pulled out of everything, that does not make sense. The one thing people with money like, and it's making more money, even if it's slow money. And I never knew Bitcoin correlates a bit on indices. Yeah. There are a couple of things that are correlated to NASDAQ if you know how to use them. And Bitcoin is one. USD CAD is another one. If I ever lost my senses and I don't know how to trade, I'll have 3 charts. Bitcoin, USD CAD, and NASDAQ. I'll probably not trade Bitcoin though. I don't know. I only trade Bitcoin when I need to make up the day's consistency. Nonetheless, it is 8 o'clock on the dot. Premium. Keep myself in check. The red line there. So that's premium of the range that we're currently in. Oh, there we go. Mm, 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 mm. 801, it's hitting premium. There is no intent, there's no clear wants to move. So usually at 720, we're looking at how likely it's priced to retrace to the open or leave the current range. We're tracing here natural because I don't think it could get above the breakaway gap today. I'm not interested in looking at open up the day. mm, 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 mm. Opening the day is pretty far. Mm, 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 mm. I know Willie and Smokey bought. Mm, 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 mm. Do, 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 do. Mm, 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 mm. So hitting that order block that we looked at earlier. Mm, mm, mm. Taking out on that by. Or is it still early? No, it's still early. Don't need to be mad about missing. Oh gosh. Mm. Let me get my friend Dash over here. Where is mm, 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 mm. 1 second. Mm, 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 mm. So looking at um the level here, them framing out the order block, contemplating if I shorten now or wait a little bit more. This is the first minute of the new M4 candle. So let's see if they make a new candle high. If they make a new candle high and then come back below the black line, I'll think about an entry. But let's see. Let's see. It already closed above. So you don't want to jump in and go short. It's risky. Hmm. But there's a little bit of risk. There's a little bit of risk of them sweeping the high before the entry prints. So it's worth noting. So that's essentially the new M1 high. And it's 1716. If when a new M1 starts, it's below that black line, and that would mean it should look like a spike up, takes the previous M1 high, and then if this opens and it wicks, I'll consider taking it. Reduce risk because this is there's a little bit of risk on them taking this high. If that's a little bit on the mad side for you because why would you not want to see that get run, then enjoy the show. Mm, 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 mm. Let's go a little bit on the risk side. And I go 15 points. That's about 15. Roughly, oh, that's a lot of points. Why does 15 points look this big? 28. Oh, yeah. I thought this would have been around 10 points in real life, but 15 points has my stop all the way up here, roughly about inside this. I mean, I don't mind. So it looks something like that. Let's say there. So that's what it looks like.
Good morning, Kish.
Good morning.
Hope you're doing well.
So far, so good. What about you?
It's been a busy last couple of weeks, so finally settling down into a rhythm this week, so that'll be nice.
That sounds good. That sounds good.
Yep.
Kish,
Hola.
just a question here. I was just looking at how the purge happened here, and then this is like a double purge,
Mhm.
and this range, and then we retraced, and so far we have not taken any previous days or previous cycle highs. So will you still be open to shorting regardless of not taking any cycle highs?
Yep.
Okay.
Then your logical question is why?
Yes.
So last week, I think I started a conversation. I don't remember if it was public or not, where I said there, your understanding of what you look for in the market is going to lead to classifying the best trades as falling into rule-based or process-based. When you understand the difference between the two, risk is never the same across both types of setups unless you just really don't give that much a damn about risk. So let me ask you a question. As far as processes go, we'd like to see, well, in a bearish sense, you'd always like to see want to see buy side get run first. Buy side run, CSD, that type of thing. That process is always welcomed for shorts. Yes? A
Yeah.
bearish PD array being respected and lower prices follow is a logical rule. The rule is, try not to go short before the order block gets hit and put your stop anywhere between that level and, let's say, the red line. Let's say you wanted to short equilibrium. Rules would say if you go short equilibrium, your stop has to be above the open price here. That's a rule because that's how you manage risk around a setup. This range here says if I want to go short, the first thing I have to think about is premium because we're already in discount at 720. Is that a rule or a process? The idea that says, if I'm bearish and we're in discount, wait for a premium run. Is that a rule or a process? Not a rhetorical question. I'm serious. Anybody who wants to comment can.
Process.
Anybody else?
Sounds like the same.
They're a rule.
Let me go again. Let me go again. If we're looking at the market and we're bearish and the market is in discount, and we say, I'll not go short until it trades to premium. Is that a rule or a process?
It's a process. It's a
No,
process.
it can't be a process.
It's
No,
a
it's a rule.
rule.
Yeah.
It has to be a rule because it's how you're controlling your participation. And that's always the difference. You don't use rules to
Right.
predict. Think about that. You don't use rules to predict. You use the process to predict.
You
Okay?
use rules to protect.
I like that. I like that. You use processes to predict and rules to protect. I've never ever thought about it like that, but that just makes a lot of sense.
New
How am I
TCM
protecting myself here?
tagline.
A tagline?
TCM tagline.
I mean, I like it. I like it. I'll probably try to sneak it into something, any other the few things I'm going to be doing over the next couple of weeks. So,
Hold on, let me trademark that real quick. Hold on.
so First thing, when we look at this, I want you to think about what we do on the call each morning. We grab this open price, we grab that open price, we put a line there, we do it like that. That's a process. We follow the process, and the process tells us what to expect next. So we got to the markets, and because of the process of breaking a key level, printing this, creating that range, that process says we should be looking for these things to happen next. The thing that we should be looking for to happen next here is premium run, because this is in discount. So we frame premium, then we frame premium arrays. It could have been a liquidity pool. It could have been an order block or something, whatever it is. Is that 20 points? Just curious. It looks like maybe it was about 20 points. I didn't manage because I was talking, just to be fair. But I don't think I'm going to manage. Well, I think naturally I'm not going to take a loss unless it's too fast for me to react. I don't want to take a loss here. It's the first scalp of the day. Coulda, woulda, shoulda. Since 720 open, it didn't get there. Logically, you want to look at since the cycle started, you have the cycle open price. You'd love to see, those lows getting run. So I was eyeing that. It didn't get there. So I'm going to hold my horses and relax. So if the process is premium to discount, then you find your premium, you find your arrays, then you just wait. That's why the only thing that made this a little bit of a tickle is because there's two highs here, or there are two highs, they're two of them. So you have to decide, what information am I getting if I have two highs? Everybody likes to look at which is the higher one, which is fine. If this was higher, then we'd have looked at this as internal, and then order block would have been here. But this is not higher. So this is retracing into that, which means your array is over here. And that's how we got that line. And that's how we got that lucky entry there. Sorry, go ahead.
To be fair to the guy who asked the question, in terms of process, if you trade SMTs, ES took that high. So it still applies. So yeah, I get what you're saying now.
ES took this high?
No, the one after.
This one?
Yes, sir.
Oh. Okay. I don't know. I don't know. I've never truly spent enough time with SMT
to
offer any useful advice. Let me just put that out there. I know what SMT is. I know what it looks like most of the time, but I've never spent enough time with it to be any type of useful advice giver on ES. If that makes sense. It's 8:15. M1 is about to close. It's looking like they want to retrace before it moves again. I am more interested in what they do there. So being bearish, automatically I want closes below that price. Or being bearish on this delivered, no, at least. I want to see, them close below here, run that, and anywhere between 9 and 10, they could decide to go higher if they want to. It doesn't really matter.
Yo, Kish, I got a question.
Mm-hmm.
For the trade management, would you not want to see price come up to that up close candle and that it's not the FEG, quote unquote FEG right there? You would want to see that stay open for trade management. Would you rather see it stay away from that, or how would you manage that if it was to come back up there?
Okay. Whenever I'm looking at managing a position I'm already in, I try to think about, is there a reason for the market to retrace? Sorry. If there's a reason for the market to retrace, then the first thing you want to think about is how much am I likely to get before the retracement? So what if it's a 50-point range and the market drops 10 points to a level that it can retrace from? Are you going to take 10 points and hold? I mean, 10 points and close and wait for the retracement to get back in? Or are you going to leave your original position as is, watch the retracement, and then decide, do I cut at break even for a controlled loss, air quotes loss? Or do I trim or something like that? As long as you start with, is there a reason for the market to retrace? Your thought process should be seamless. First thing is, anytime there's a level of significance and the market closes below, you want a retracement. The only time you don't want to see the market retrace after closing below significant level is if you're expecting a breakaway gap. Think about that for a second. Hit the level below equilibrium. Do you want this to be a breakaway gap? Or should this be a breakaway gap? You don't need to answer that. If this should be a breakaway gap, then IOFED lower. If this is a logical area to reaccumulate, then the retracement should get back in there. So while I'm not giving you a pinpoint answer, I'm trying to show you that I don't know these things in advance. It's all in how I read the market based on the information it provides.
If this then that.
If always,
Yeah.
always, I'm just a guy who trades. I don't have any superpowers outside of being grateful, probably. So what I see here is what I read. So when do you like order block FEG combo? This should be something useful. Order block FEG combo. When do you like to see that type of narrative hold? When the market is expanding. That's the answer, is when the market is expanding. Do you expect an expansion here?
In this case, it's a kind of like a consolidation. So you really couldn't expect that, or with high probability, right?
Exactly.
Okay.
That's it. That is it. So now, as you're reading this, since we're not expecting this to be the most well-paid FEG in terms of a breakaway gap logic, anticipate that they're either going to trade to this candle's high or dig into the FEG. If they do none of that, then it's suspicious. It's never a good idea if you see logical things on the market that it should trade to, and you get excited because it doesn't. It just starts moving lower. Usually that's a setup for something cruel, like a big candle with wicks on both sides. So I prefer finish up whatever business you have up here. So the high on this candle is 85.3 and the high on this is 85.4. Okay. I can't argue that it did give it that little kiss, but let's see. Let's see if that is enough. 821. This looks like it's a new high or equal high. So let's see. Can we get next M4 taking that low? And then as we go into 828, the volatility comes in a little bit heavier.
I have another question. So it's in terms of your trade management, right? So you were looking for that low to get taken out, and it didn't get taken out yet, right? The low at, I don't know what price that is, but for the trade management now, do you move your stop after it takes out that low? and closes below that low, or do you just give it? Do you continue to give it room? Are you did you manage the trade now, or are you still giving it room to still
This
run?
this one here, which
Mm.
law are you talking about?
The one where the blue line is for the mitigation.
This one
Yeah,
here,
below that low.
right
Yeah.
here. So once this happens, I have to make a decision. The
Mm,
decision is going to be partials or break even
mm,
or both. But that blue line and this low, they're the areas that you want to make decisions. So if you keep yourself focused like that, which means look at the chart, doesn't matter what it's doing, I'm going to make a decision at these levels. If it gets that high and it does this, that's a decision. That's what I'm going to do. If it gets there and it does something else, then my decision is to do nothing. As it's moving in your favor, again, fear, greed, anxiety, it's natural. There's no getting out of that. But you grow as a trader by allowing yourself to not let only fear, greed, and anxiety guide your decisions. What is the market saying? So that's why it's one of the reasons for my alleged talent at executing. It's not that I'm better at executing, it's that I don't allow the idea that this could be a possible loss to stop me from entering when the rules say I can. If my rules already protect me, there's no reason for me to fear a losing trade or whatever. I've been wrong, like really, really wrong, 2 times now since the start of the calls. Both of them were on Fridays.
mm.
Try to imagine what am I going to do next Friday when we have a call. Just think about what I'm going to do and then see what I actually do on that day. And then think about the wins this outside of those losses. And do you think we're still in the red? I'm not journaling all the trades I take on these live calls, specifically because I told myself I'm not going to. None of these trades are going in my journal. The day goes in my journal, but not the trades, which sounds weird to you, but that's fine.
Nah, it's not that weird.
Yeah,
I understand
I'm
that.
not using all my air quotes tools to trade here, so I can't journal those because then my journaling process is going to be off. What I can do is journal what the day was like. What steps did I take? How did I read the market? How did I perform? Did I follow my rules and all that? That's what I'll journal. And if I make mistakes, then I'll journal why I thought I made the mistake. For improvement's sake, not for validation. But it is 8:25, pulling up on 8:28. I don't like how this is not trying to close below this open price. It's no bueno. That is no bueno. And that's not fair. That's a process. The process says when we're right, it's going to slam through. So now that it's not slamming through, it's logical to think about, at the very least, think about taking risk off the table. Think about. Let's see at 8:28.
Fridays are for revenge, right?
It would seem the markets are taking their revenge on me on Fridays. What is this?
Even my wife knows about Fridays.
Everybody has a Friday story, to be honest. Everybody does.
Especially on NFP.
Man, stuff like that just made me remember the good old days, man. You remember while we wait for this, does anybody remember that time in their trading career where they didn't know that the calendar was important? When you get that big move out of nowhere, For me, the biggest reality of that happening came when Boris Johnson
Oh,
oh
oh my God.
and my my my
Wasn't that around like 2021 or 2020, 2021?
yep, that was the
Yeah.
first time I saw firsthand
Yeah.
brutal
I was
news.
trying to pass I was trying to pass FTMO accounts around that time and I got straight wiped out with
Yeah,
Boris
yeah,
Johnson.
yeah. To make matters worse, around that time is when GU was my friend. GUGJGA. Man. Okay. This is setting up to look very, very good. So now you don't want this M1 candles high to get taken. This is a new M4. I would not want to see them make a new high. So instinctively, you want to see just start moving away now. Nothing but downside. M1 should look like this. Nice, 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 nice. Well, not nice until we get below here. But that FEG that we talked about, it's been worked. Whole lot of closing price on this 685.4, so exactly at this high. I'm going to eyeball and say this is about 50% of the FEG. New M1 candle coming in now based on the time. So this is like a M1 pullback. So since I'm expecting it to look like this M1 wick should offer degen entries. Not for me though, not for me though. It's still
I like how I hit equilibrium and that up close candle and that FEG just
indeed,
fell straight from there.
indeed.
Do you tend to stay because I know you do scalens too. Do you tend to stay away from scalens and uh market conditions like where it's what it's doing right now, like consolidation type condition?
So if we're close below here, I wouldn't be afraid to scale in.
Mm,
I have zero fear in scaling in if we close below here.
mm,
So scaling in to me is degen.
yeah.
But don't worry, this big spike is not fearful in this case. As a matter of fact, I was just about to say, as a matter of fact, let me get ready to enter when this spikes again.
Wait, what time is that?
Equity is open.
Oh, okay. I've been so locked in. I was not paying attention to the time on my chart.
All good, all good, all good. There's
Yeah.
that spike. So now equity is open, volatility should be done. Okay, take that. That got me. All right, Nasdaq, let's play. Three, two, one, die. Why is she trying to violate my breakaway gap?
That just sounds wrong.
Oh, confluence. Just the confluence. I remember once upon a time I had a fear of going short on no news days because I believed in the idea of selling pressure and buying pressure. Look how far I've come now. Okay, this is the second minute in the 832 M4 candle, which means this is running the 832 M1 high. So I need to see my confirmations here, or breakaway gap is going to give it up.
Where's the bag for you at? I can't find it. Right. Oh, okay. Oh, okay, okay, okay.
It's hitting 50% of the bag again.
And 2 o'clock. Yeah, I wanted to see that run lower first.
Likewise.
Yeah, because I wanted to go higher today, but it ran up higher first.
Which means we're probably going to get a sell and a buy. I'm
Mm.
going to sell this high right here because the retracement was a little bit deeper than I expected. Oops. So I'm going to sell this.
I can just hear David asking why.
I think why in this case is kind of self-explanatory.
Yeah.
Right at 2 p.m. Yeah, that's the open price. Will. I think Will was long since the beginning of the morning. Now I'm gonna scale in. Well, not right now, but since it's rejecting, I want to look at scaling if M4 starts to break down. Okay, closing inside the breakaway gap with the high. I like it. I like it so much. I'm going to risk not the position right here. Boom up. Since we're not closing above the breakaway gap, we'll just wick them both. I'm risking another entry here. So now I have enough skin in the game to smile a lot when we take 720.
And Kish, with these aggressive entries, do you also manage aggressively also at 30 points? You're taking bulk off or just
It depends on the delivery. So here, I'm allowing myself to enter again because of two things. We wicked through, tagged the high, didn't close through the breakaway gap, and then it came back up and tagged the high of the breakaway gap. I'm entering that again. So now it's about managing here is about expectation. What do you think I'm expecting
Okay.
that both of these are here in terms of the breakaway gap?
Yeah, should respect it.
Right. So I'm
Or
looking
it
for
is.
a close below.
Yeah.
I'm looking for it to
Yeah.
close below the breakaway gap. Once we close below the breakaway gap, I think we have enough reason to see more movement lower. Truly aggressive is having them close below the breakaway gap and then next candle open and wicks the breakaway gap and sell again. That's like risque in French. Make me happy, make me happy. Go, go, go. I could mitigate risk, and again, this is one of those eternal moments that we'll always have, and we should have a lot of them on the stream. I can call it a stream, where there's an opportunity to mitigate a loss, but the setup doesn't say I need to be scared. So for some, it's going to be considered as greed. For others, it's going to be opportunities to grow. For me, it's always an opportunity to grow. I will not manage simply because I took a small loss here when I have enough risk to make this make my entire day beautiful. Now, this I don't like. Last moment, dying moments of the M4 comes all the way back. That I don't like. Still nothing exciting because we haven't closed below here, so I'm not that, oh my God, about the short. I like my entry for sure, but I still need to see the M4 close below the bag.
Now Kish is smiling. Now Kish is smiling.
No, I guess it has to close below the bag first. We saw it snap back moment ago. What I am thinking
That's true.
about is scaling out one position. I didn't, but I was thinking about it. It will put me in a little bit of green, and then the other one would do me well. But I'm still holding both. Trust in the analysis, no emotional trading.
The humming is what pushes the market lower.
Oh man, it's dancing around premium. Well, it's not premium, Shane. Equilibrium. So risk is off the table here, guys. If you can trim, I would say trimming here gives you less of an emotional attachment. Should it should give you less of an emotional attachment here. You don't want to see them discount and then pump and have you scared. So at the very least, the first thing you have to do here is you have to take risk off the table. And that's about 40 points. Well, assuming you are following me blindly. Five, four, three, two, one. See what the close looks like. There's a
Ish,
close.
do you worry about this getting wicked above and then lower again? This that last M4 candle?
As in getting above, like higher again?
Just yeah, wicking it.
No. If I'm looking at this, as I wouldn't think, let me tell you this. I wouldn't want to see this go higher than like a few points above this open. Remember earlier when I said that once you have a significant key level and we close below, anticipate a retracement. This is that
Yeah.
retracement. But I would have liked the open. Everybody does like the open, but I'm not mad. The only reason I want the open is the scaling, if I'm being honest. That's the only reason I want. If it continues, I'm fine.
Yeah.
Sean says second entry. In this, remember, as I was saying, wick above, close inside. And this is wicking above. I'm shorting that. And you want to see them close outside of this. So you could lean on the analysis about the breakaway gap is still holding. So of course, invalidation of this idea comes if these become order blocks. And you know what that looks like. Oh, it's so close. So close. Didn't get that as a scaling. Or is it reclaiming the order block from over here? I don't know. On my feed, spreads are toying at this. Like, you know how you have two lines? But if you have two lines and you go short, your entries are going to be at the bottom line. I'm watching the here, and I'm like, just a little bit more, just wick back up again, and I'll enter. But it didn't. So, open price of this is 703.3, and the high of this candle is 703.6. It just and then left. So toying with the idea of a potential scaling, but I wanted it to be perfect. Could have just limited. Silly. Could have just put a limit there. But now I'm just going to anticipate that it's gone and I missed it and that's it. Be content with what I have. Of course, it comes back when I said I'm being content. I'm truly going to be content. I'm not trying to enter again, okay? I'm not trying to enter again. Not trying to enter again. Okay. Hmm. Do, 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 do. Oh. I'm laughing at Nasdaq. Nasdaq wants me to play. Okay. Okay, Nasdaq, I shall play. I will not encourage anybody to short again, but I'm going to short again because Nasdaq is asking me to. So I'm short there. Ah, I knew it. Can you leave the breakaway gap now? Yes, 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 yes.
Okay, shouldn't you look at this as a potential order block closing about 50%?
Which one? Which one?
This down candle.
This one
big
here?
one. Yeah.
So my first question would be, in your opinion, what needs to happen here to change the order flow from well, not order flow, the delivery from looking bearish to looking bullish?
Taking the high again.
Close above the breakaway gap.
Yeah.
That's what I'm saying. I'm laughing because while this is here, I knew that, well, not new. I'd have thought that maybe it toying here means it's going to run it and then move. But because I was talking myself out of participating again, no, Will, no. It wicked it already and it's pulling back. So the chance of that happening is very, very slim. So I was trying to talk myself out of trying to enter here again because of how many times it tried and failed. Yeah.
Fuck you
So
guys.
a little bit of drawdown on that position, but yeah, do it with a big down candle. Yeah, that would get me. That would really have me feeling, woo. Probably going to micromanage the position over here though, to be honest. Because why not? Why would I not want to micromanage that position? I don't want to turn into a losing trade. So if it comes back before this M1, this M4 candle closes, I'm going to cut it. If it expands and this M4 candle closes with like 20 points, I'm going to trim it. So I entered at 19, well, 719 on my feed. So almost 20 points. And I got away with 20 points, ladies and gentlemen. It's a beautiful day. Taking runners from the positions at the top now because it's pulling up on 720 and I don't want it to reject with me still there. That's it. Leaving runners. Day is over. Thank you for coming out. Oh, okay. Nice exhilarating start to the week. Remember I said I'd manage at that low, so between here and here, I managed. Okay. I'm feeling good. I'm not going to hold runners. I'm gonna hold to probably the low if we don't pull back. So I want to break away. I wanted to break away here instead of pull back. So usually I'd say close below significant level pullback. In this case, I'd rather see movement hit this. Don't pull back. If it's trying to pull back above 720, I'm going to close one position fully, one of the runners fully, and then leave the other four for banks really. I don't want to see pullbacks here. I want to see breakaway. So close below here. As a matter of fact, I'm going to trail my stop on one of the runners to right there because I'm not playing with this. Oh, it's moving. It's moving. Okay, it's moving.
I was gonna ask why, but I want to see if I could get it before you say it, right? Is it because this up close candle didn't go through the bag and then it completed came back into it and did whatever it was supposed to do here? So all of this should be balanced and it should run from here instead of coming here.
Yes, but
Okay.
so you're right. You're very, very right. The term is just sorry, I'm you know what? Let me just I'm trying to watch the thing on my phone as well. So let me just close one fully. So
Okay. No, go ahead, man.
you can pay attention. No, it's all good. I wanted to close one anyway. Close it. So favorite indicator. I want to take a look at this for a moment. For a moment, let's just take a look at this. Everybody understands what this is, what it says, what it means. We're good. We know what this is. So if we know what this is, and I say, where do entries form for shorts here? What would you say? Not a rhetorical question. There. Cool. So it wasn't a rhetorical question, right? So no, there's no wrong or right. It's literally these two highs. It's not going to form here because you're expecting that to get run. Cool. So if you know you want to enter here or here, to frame where these are likely to form, as a matter of fact, to frame where this first one is going to form, you need at least this or a level above it. Two ways to kind of decipher where this is likely to form. Knowing where this high is or knowing where a level above this high is. So if you have a key level, so this black line here, devil's advocate and say this black line here was our key level and it pushes towards it like this and it starts to fade, you don't try CSD in that, or you don't try looking for a CSD to go short and put your stop above that. That's asking for it. Give it a little bit of an appeal. Now, if you have this fail or failure to get here on that level, selling this is scary. It has to be scary. It has to be scary to see this and see them run a high and think I could sell that. But the more you get better at identifying where your key levels are, the easier it is to trust when you can sell this. And what that means is you, over time, experience will show you a million different ways of the same thing printing. How many times do they print and this here is inside previous price action? How many times do they print and this here is the open price of a day, 2 days ago, a day ago, right? Those things happen. So the more you see how to trade a particular kind of delivery like this, the easier it is to trust it. This is easy to trust for everybody because if you can see this expansion, you could see the order block that prints above here. You could see FEGs inside here. You could see if this low got a wick or a close in this push. So many things that you could look at. You could look at the first time it closed here, you want a retracement. So where's the internal highs to the left? All of that. You could look at all those things. You could look at what if this was one big order block and this is not another candle going through? All of that. But then understanding the process and knowing this and this should have you been able to translate what does this look like in candlestick format. And that is when you master quote unquote chart patterns. Truly, knowing this is easy. It's a line. But how many times do you have a candle do this and it would just go crazy That right there is how you move from knowing information to applying it. That's what you should be getting from live tape reading, like or tape reading. In the end, it looks like this. So you could see a high and a high being around and a low being broken and a retracement. But when you translate this to here, can you see wait, what was that? Looks kind of cool.
I've never seen that before.
Yeah, yeah, it looks kind of cool. Think about that. So what I was saying is here, hold back. I'll push it over here just to make the appeal better. This. So now here's my question. In the drawing, then we'll wrap up. In the drawing, here. In the drawing, you have this push up, this low, that high being around, and this being below that low. What happens? I don't know, I'm not getting the aesthetics from the drawing. What happens when there's a push down that fails to sweep the lows and then it pulls back? What happens? So I need more space. Okay, let's do it over here. I'll use the annotation tool since the other one is making it messy. So we have 1, 2, 3 here. Note that low being around, that high being around. Note those. Now look at this. Here. But then we have this, then that. Note here. In this delivery, you want something here. What do you want here?
Breakaway gap.
Breakaway gap. There we
Okay.
go. So you'll remember earlier, I was saying I wanted, annotate, bam. Take that off. Remember when this closed here, I was saying I don't want a retracement.
Okay.
Take a look at this now. You see that drop here, that rally there. See this drop does not take this out. So when this happens, breakaway gap comes here.
Yeah.
So this is a process. And I know that process intimately. I'd like to believe I do. So when that happens, that's what tells me when I can get away with certain things. Now it's easy to see when it's multiple candles, but can you see it when it is candle by candle? Can you see it when you're looking at the M4 and watching the candle itself print, watching it dance, and then figuring out what the M1 should look like because of that? So you can see this high being around. See this push? Does it take this low? No, it doesn't. So when that happens and this closes, here is where your air quotes breakaway gap should be. But they put an up candle. What happened, or what do you think about when it's going back up here? First of all, if this retraced, it shouldn't get as high as the retracement. But the dynamics of how trading actually works, bodies tell the story and ... What did ICT say? ...
Wait through the damage. Yeah.
Do the damage. So you can see how this body represents the low that was run here. So retracements where the breakaway gap is likely to print is not likely to be violating the body, which creates the low that was run. So it will sit there and break away from that low. But that's a whole lot of talking to kind of.
And all this back and forth too. It really shouldn't close above
This
that.
looks like the welcome to the kitchen teachings again.
Oh, I said it already? Look at that. Look at that. Sounds like I actually know what I'm talking about then. Or I'm making it up as I go along. One of them. But ladies and gentlemen, this trade was beautiful. Let me see in the chat. I'm assuming it's a lot of entries. There we go. There we go. There we go. There we go. Cool.
Hey, Kish.
So don't go giving your money back. Somebody was saying Kish.
Yeah, are you still interested in getting this mitigation used for further low down or no?
Sorry, it wasn't a part of the process when I was trading. So give me a second. Let me see. Why is this mitigation?
Last down candle before the run.
No, that's not the definition of mitigation. There must first be a double purge for mitigation to be present. They must be running a high twice. So let's take a look at. Currently, we only have this range. That range was run here. Yes? So that's one time it's been run. If this push gets as high as this or higher, and down candle before that run becomes mitigation. Mitigation is a product of the double purge.
Never thought of it like that.
All good, all good, all good, all good. Just so you know.
W Jim.
So, ladies and gentlemen, share your charts in the chat. I am going to go stretch, get my push-ups in. Summer's almost over. And I will see you tomorrow, same time, same place.
Yes, sir. Appreciate it, Kish.
All good, all good. Enjoy the rest of your day. Don't go giving your money
Thanks,
back.
Kish.
Thank you, Kish.
Thank you, Kish.
Pleasure, pleasure.
Thanks, Kish.